Official data, anecdotal evidence are suggesting that continued downward pressure.
We're going to ask it even further on the consumer level. So that's the anecdotal evidence. Essentially, they're trying to move product while people are not buying.
Charlie, in terms of the property sector, let's dig into this housing slump, which could be much worse than official data is showing. Can you tell us why?
Prices announced by the Stats Bureau showed the home prices in China have fallen 2.6%. That's new home prices, from its peak in the summer of 2021. And the price of existing homes has dropped 6%. But based on what we heard from a private data provider and also real estate agents on the ground, the prices have fallen much more sharply. In Shanghai, in some downtown areas, fallen about 15%. In Hangzhou, the home to the headquarters of Alibaba, the problem is even bigger. It's down more than nearly 30%.
If you've been keeping even a casual eye on the news, it's hard to miss the signs of China's economy navigating through turbulent waters. In recent times, the world's second-largest economy has found itself facing a series of daunting challenges, each casting a shadow over its economic landscape. Overleveraged property developers battling with escalating debt and home prices that have grown becoming unattainable for many citizens, particularly the younger generation. The mismatch between skills and jobs causes high unemployment among educated urban youth. Furthermore, decreasing exports and deflation have exacerbated the economy's challenges, with weak consumer demand and an over-reliance on exports worsening the situation. In today's video, let's take a look behind the collapsing economy of China. China's economic model has traditionally been defined by a strong emphasis on investment and exports, which has resulted in impressive growth while also exposing the economy to weaknesses. Extensive investments in infrastructure and industry have fueled economic growth, but they have also resulted in challenges as overcapacity and rising local government debt. Furthermore, China's export-led growth strategy has aided the country's ascension to global economic powerhouse status. Nonetheless, as shown in recent years, this approach has made the country vulnerable to global economic turmoil and trade disputes. The relatively low percent of household spending in China's GDP poses a significant issue. While consumption is important in Western economies, contributing significantly to GDP, it accounts for only a small portion of China's economic activity. This discrepancy is significant because it indicates that the average Chinese citizen does not consume goods and services at levels comparable to those found in industrial nations. Instead, China's economy is primarily reliant on investments and exports to sustain growth. To addressing these imbalances will almost certainly necessitate a transformation in China's economic model, with a greater emphasis on increasing local consumption. As an important call to action, the IMF advises China to rebalance its economy towards domestic consumption.
Most of this growth is the product of stepped-up public investments and other forms of support. Less of it is driven by domestic consumption. So gearing it growth more towards domestic consumption is something that China will pursue throughout the year.
The International Monetary Fund's IMF recommends for China to rebalance its economy towards consumption, emphasizing the need of tackling the country's economic issues. As a worldwide financial institution, the IMF acts as an unbiased advisor on economic policies and stability. Its advice shows a fundamental concern about China's present economic model. The lack of strong domestic consumption had resulted in a chain reaction of crises within China. One of the implications of low domestic consumption, for example, is weak consumer demand within China. When consumers do not spend, firms suffer lower sales and profitability, which leads to price decreases. This is known as deflation, and it can further dissuade spending by causing consumers to postpone purchases in expectation of even lower costs. The deflationary trend feeds into itself, damaging firms and overall economic growth. Furthermore, the lack of strong domestic demand for investments has had a substantial impact on the property market problem. A flourishing real estate market typically relies on strong demand from domestic buyers. However, many properties stay empty or unsold due to low domestic consumption and affordability difficulties. When investors, especially local governments and developers, are unable to find successful uses for their cash, they frequently turn to real estate investing as an alternative, which can contribute to property bubbles. Don't forget that the issue of high youth unemployment is inextricably linked to China's reliance on exports. As exports fall, the manufacturing sector, which has historically been a major employer, struggles to produce enough jobs. Higher unemployment rates result, particularly among well-educated urban youngsters. This problem is exacerbated by a lack of alternative work alternatives inside the domestic economy. Finally, Chinese local governments have accumulated substantial debt while investing in large-scale infrastructure projects. However, because of the low level of economic activity caused by inadequate domestic consumption, these investments frequently fail to generate the promised tax revenue. This burdens local governments with debt and limits their ability to repay it, potentially leading to local financial crises. The structural transformation of China's economy presents major problems. For starters, any fundamental change endeavor faces the threat of a temporary economic slowdown. Transitioning from an economy based mostly on investment and exports to one based primarily on domestic consumption may upset long-standing economic patterns. As the economy adjusts to these new dynamics, growth rates may slow, affecting a variety of industries, including manufacturing and construction. Second, opposition from those who gain from the current economic system is a major impediment. The current paradigm has clearly created winners, particularly among large exporters and manufacturers. These vested interests may oppose reforms that could raise labor costs or reduce company margins. Such opposition might create political difficulties for politicians attempting to implement required changes. Furthermore, Xi Jinping's ideological resistance to what he sees as Western-style consumption-driven growth is a barrier. His concerns about potential wastefulness and the promotion of a lazy culture associated with such purchasing patterns could stymie efforts to rebalance the economy. Finally, the Chinese Communist Party, CCP, has been aware of the necessity for economic rebalancing since at least 2007, highlighting the issue's acknowledgement. However, these challenges, such as probable economic slowdowns, vested interests opposition, and ideological impediments, continue to hamper China's path to a more consumption-oriented and sustainable economic future. With that, let's end the video. This is Visionomics, signing out.